Committee, Ms. Wagner is now recognized.
Yes, thank you, Mr. Chairman. Commissioner Peirce, the SEC continues to extract huge settlements for enforcement cases relating to, I'm going to call off-channel communications. Firms have paid a combined total of over $3 billion in fines as part of the overall sweep. Has any fraud or customer harm been found, and what is the SEC basing these fines on?
It certainly has become a cash cow for the SEC, and so the typical case is not based on fraud or any evidence of a problem other than a record-keeping problem. Now, that's a serious problem, but I think we need to address it not through enforcement first, but through regulatory work that involves working with people on the outside the industry and so forth to try to figure out how to make these rules workable and also effective for our regulators.
No fraud, no customer harm. Why didn't the SEC issue a risk alert during COVID, for instance, when it knew that the whole world was becoming more reliant on using phones for communication during this time of abrupt, forced remote work? Why did the SEC wait and play gotcha after the fact with enforcement actions?
Yeah, I mean, I think you point out that a lot of this probably did stem from the fact that COVID changed the world and the way we do things. And that's why we should have taken a regulatory approach first. And then for people who were outliers and bad actors and were defying the rules, we could have brought enforcement action.
Over $3 billion. It's quite the cash cow. I'd like to enter, Mr. Chairman, into the record the dissent that Commissioners Peirce and Ueda released today regarding this. Commissioner Ueda, pardon me, retail investors are statutorily allowed to invest in private investments, including private funds via closed-end funds, which are subject to important protections under the Investment Company Act. However, SEC staff, through informal guidance, whatever that is, and not rulemaking, has prohibited a closed-end fund from investing more than 15% of its net assets in privately offered funds, unless the closed-end fund's shares are available only to accredited investors. Private funds have grown enormously in number and variety, sir, in the past 2 decades, but ordinary investors are unable to invest in them. That's why I sponsored bipartisan legislation, along with Representative Meeks, the Increasing Investor Opportunities Act, to overturn the informal SEC staff position and allow closed-end funds to more fully invest in private funds. Earlier this year, this important legislation passed the House with significant bipartisan support. Why has the SEC permitted its staff to deny everyday, ordinary retail investors the same opportunities for investment returns from alternative asset classes enjoyed by affluent investors?
I find the position taken by the staff to be frustrating. Those staff positions are under the control, though, of not the commission, but whoever serves as chairman. One thing we've learned is that diversification matters, particularly for retirement investors.
Yes.
For 2.5 years, I was a state securities regulator. Therefore, I'm a member of CalPERS. My portfolio at CalPERS looks very different with its allocation to private equity, venture capital, and private credit than I can ever obtain as an ordinary worker trying to seek to save money through an IRA or a 401k plan.
So you're obviously concerned about the SEC staff position?
I'm sorry.
You're concerned about this SEC
Yes, I
staff
am.
position. And should retail investors have access to these investments through regulated products such as closed-end funds?
I think we need to provide those opportunities to retail investors, yes.
Yes, not just the rich and affluent. There's bipartisan approach to the SEC swing pricing proposal. We've heard a little bit about it. Industry commenters have claimed that the proposal is both unworkable and harmful for retail investors. And even the Consumer Federation of America opposes the proposal. Let me just say, Chair Gensler, did you still intend, because I'm not clear on this, to advance this swing pricing rule in the face of overwhelming opposition? Sir.
We got a lot of comments, as you mentioned, about the challenges of that rule. Also, I want to note that the banking regulators oversee about $6 trillion of collective investment trusts, and what we've said, and what I've said is, until we see what the bank regulators do, I think
All right,
we
so
should
it's still not
put
clear.
a hold on this.
I would say to Mr. Sherman and others that oppose it greatly, along with two of your commissioners, a reproposal cure has got fatal flaws too. So I yield back, Mr. Chairman, as my time has expired.